Welcome to this video where we are going to have a look really quickly and briefly at what an order block is and how we can trade it. This video is for beginners, so it's quite simple. It's going to be quite a quick video, nothing too in depth and nothing too difficult, just for anyone who's looking to get started in Forex and who is interested in order blocks and SMC trading. So firstly, an order block is an area in trading where banks and other big institutions have their orders set where they are ready to enter and leave the market. So this basically means an order block is where we can see how the banks and the other big boys are trying to trade the market, how they're trying to enter a position and how they're trying to leave their position. And this is why order blocks are part of smart money concepts, because if we can identify where the banks and the big boys are trading, then we can trade alongside them rather than against them. And if we can trade alongside them, we can hopefully profit alongside them. So this is why it can be quite helpful to know where order blocks are and how we can trade them. So now that we know what an order block is, nice and quickly, we need to find out how we can start identifying them on a chart. So a good rule of thumb to go by is that usually the last bullish candle before the bearish move is the order block, and vice versa. So the last bearish candle before the bullish move is usually the order block as well. And it's because these order blocks cause the break in structure, which I'll show you in the example right now. So now that we know that it is usually the previous candle before the big move in the market, we need to keep that in mind whilst looking at this example. So now that we know what an order block is and how we can quickly identify one, we need to know how we can trade an order block. So I usually use this really simple two-step process to identify and trade order blocks. So number one, we need to look at the market direction and find a break of structure. So as we can see here, the market direction is downwards, it's bearish, and we know this because we have a high, we have a low, we have a lower high, we have a lower low, we have a lower high, and then we have another lower low. So this shows us that the market is moving step by step down. So now that we know the market is moving down and this is bearish, this means we're looking for sells in this market. So we're looking for a possible entry into this market that can allow us to hop on a sell and hopefully make some percentage. So now that we've identified the market direction, we now need to identify the break of structure, which is also known as the BOS. And so as we can see here, we had two lows in the market, and this was the structure in the market, these two lows. And we're looking for the move that breaks this structure. So as we can see, these two lows were broken by this move in the market. So here we have the break of structure. Now we need to find out where the origin of this break of structure was, and that is what the order block is. So the order block candle, as we said, is the last bearish candle before the big bullish move, or the last bullish candle before the big bearish move. So we had a big bearish move here causing the break in structure, and what was the candle before the big bearish move? It was this bullish candle here. So that would simply be our order block. So if we can just highlight this order block, so this is our order block candle. So what we can do is we can look to trade from this level, because this is the area in the market where the banks and other big institutions may have their orders set. So if we know that the banks are going to be looking to sell from this area, then hopefully we can try and hop on a sell position from this area as well and profit alongside them. So now that we have identified our order block candle, we can now look to try and trade this. So if we can go down to a lower time frame just to get a more refined order block candle, just so we can get a tighter stop loss and increase our winning percentage. So as you can see, this blue candle here was the last bullish candle before the bearish move that broke these two lows. That broke this structure in the market. So now that we have identified our order block and our break of structure, we can plan our trade. So we will be looking to enter this market around this area with a sell position. So when price hits our order block, we want the market to trigger us in for a sell. with a 15 pip stop loss roughly, just above the order block, enough space just in case you get the odd sporadic movement which could take us out. So just to play it safe, we're going to enter at the order block with our stop loss just above it. Now, in terms of our take profit, let's have a look back on the higher time frame and see where we could look to take profit. So as we can see, there's another order block here. So how can we identify the order block? We're looking for the break-in structure and the previous candle to that move. So as we can see, there was a high in this market here, and this structure was broken, as we can see, with the bullish move past this structure. And what was the previous candle before this bullish move? It's going to be a bearish candle here. So this is our order block right here. So we can look to identify, we can look to aim for this take profit down here, because we will be anticipating the market to come up, trigger us into this order block, and then make its way down. The market never moves straight, so the market will eventually make its way down to this order block and then potentially start making its way back up. So this is why we'd like to get out of the position down here at this order block and get into our position up here at this order block. So that is the general trade idea that we are looking for, and now let's just see if we get triggered into this trade and what happens. So if I can just press play. Okay, we nearly got triggered in here, very close. As you can see, it's very close, but it just didn't come right up to our order block. So let's see if price does in fact reach our order block and trigger us in. Okay, so now price has triggered us in as it has entered the area that we were identifying. So now we are in this trade, and now we have to see what happens. Let's just speed it up. Price is moving well. Are we going to hit take profit, which is the zone towards the bottom of the screen? And there we go. As you can see, price has hit our take profit and started, as you can see already, to start moving away from this order block, as there could be some buy orders around this area. So that's why we have perfectly got price to trigger us in our order block, a tight stop loss, and we have got out just as price may be starting to turn around and head back up. So as you can see, that's a nice 7R on this trade, so risking 1%, that would be a 7% gain on this account. Super simple, and a really nice clean trade, as you can see. Now this was a really simple and quick analysis of how you could have taken this trade, and there are more things that you need to look out for, such as like stronger order blocks and what order blocks you should avoid, but this is all to do with liquidity and more in-depth stuff that we can look at in the future. But this was just a really quick video to show you how you can identify and trade an order block just simply by following this little two-step method that I like to use. Keeps it nice and simple, doesn't need to be too complicated, and that is how you can get started in Forex by trading smart money concepts. So I hope you found that helpful. Thank you.